Good afternoon. I'm Marquita Wiley, and I'm your moderator for our regular Friday afternoon webinar. Innovative Business Advisors has been pleased to bring this webinar every week since the beginning of the COVID-19 emergency started. And we've, over the course of the several weeks, shared a substantial amount of information regarding tools and resources available to small businesses. Today is not unlike our previous weeks. We have very, very important information to share with you regarding relief programs. And additionally, today, you will hear specific information related to all issues related to aspects of bringing your human resources back on board through this reopening process. But first, I want to go over logistics. We are on a Zoom portal. And for many of you who are familiar with Zoom, you will see in the lower panel of your box a Q&A icon. We're asking that if you have questions throughout the webinar to click on the Q&A tab and enter or type your questions in. We will answer some questions via typed response during the webinar, but all questions will be voiced. They will be read and answered verbally at the end of the presentation component of the webinar. Don't worry about taking notes. The PowerPoint that Steve Denny will be presenting here will be available to you after the webinar, along with a full recording of the webinar and a transcription of all the questions in the Q&A session. So that's it for logistics. Let's take a minute and meet Steve Denny and Terry Lammers. Not a new introduction for you because you've been with us, especially if you've been with us for several weeks. Steve and Terry are co-founders and managing members of Innovative Business Advisors. Steve will take the lead on the update component of this presentation today, talking about an update on new information regarding the resources available to you related to programs that we're seeing from federal, state, and local governments. Following Steve's overview, we will hear from panelist Kim Baker. Kim is founder and president of Vivid Performance Group, and she will present Reentry Preparedness, the Human Element. With that, Steve, I'm turning it over to you.
Excellent, Marquita, and we're so thankful for your taking the moderator's role on every Friday afternoon, giving us your Friday afternoons to lead these sessions. We so much appreciate what you do for us. Folks, we have got some interesting updates that came to us late yesterday, and we're gonna go through those today. And as you can see on the screen, our theme for this particular webinar is not only to give you some updates, but help you with cash flow. That was one of the things that our audience told us was most important to them as a future tool. So we've got a couple of additional things that we'll be providing for you on cash flow today. Let me just remind you that if you are new to these and want to learn more about Innovative Business Advisors, we have got a rather comprehensive website, and we would direct you to that. You can see our bios and have many links to various resources that are available to us. So just to cover the agenda for today, a couple of things to discuss on the Paycheck Protection Program. Then we'll also give you some new developments regarding the Mainstreet lending program. We'll then go into the cash flow. This will be our third in our series of discussions regarding cash flow for business owners, how to manage the cash flow for business owners, and particularly in these unusual times. And then we are honored and delighted to have a featured presenter with us today, Ms. Kim Baker, who is the founder and owner and president and CEO of Vivid Performance. And we'll tell you a little bit more about her as we get to that point in the presentation. And then, as always, we're available to take your questions and comments, and we'll do that through the balance of the hour together. So with that, let me give you a quick update on the Paycheck Protection Program. This information is as of Friday, the 6th of June. So there was still $130 billion of PPP loan aid available to business owners in the United States. So if you happen to be a business owner and have not taken advantage of this, there's still time. You've got till June 30th to get your application in. Unfortunately, the application process changed a little bit yesterday. It's a little bit longer. Used to be just fill in 3 boxes, check some certifications and sign your name. Now it's a little bit longer, but still a very easy and streamlined process to go through to get your application in. I would emphasize to you that for an old guy like me, an old gray-haired guy, this is the cheapest money that I've ever seen in my lifetime. And if you are a business owner and could benefit from having some additional liquidity in your business, no time like the present. Don't wait another day. So let me give you a couple of major updates that came out this week regarding the Paycheck Protection Program. As you may recall, last Friday, we gave you a full update on the most recent legislation that President Trump had signed last Friday, which was the amendment to the PPP program. That made some significant changes. Yesterday afternoon, the Small Business Administration released a new interim final rule providing some additional guidance, and there are a couple of key things included within that that we're going to share with you here today. First and foremost, a lot of questions about the change in the amount of funds that you can use for payroll costs. So if you remember, the Paycheck Protection Program is a loan program that has a forgivable component to it. So if you use the funds in the way that are specified within the program, up to 100% of your loan could be forgiven. In the past, you had to use 75% or more of the proceeds of the loan for payroll cost purposes. The PPP amendment that was signed into law a week ago today changed that down to 60% or more of the proceeds, and of course gave you a much longer window. So you used to have 8 weeks to use that and then be able to apply for forgiveness. You now have up to 24 weeks at the borrower's discretion. However, let's assume for a minute that there are several things going on in your business and you are not in a position where you can use at least 60% of the loan for payroll purposes. You need to use a lower amount of that for payroll and a significantly higher amount for other uses. What will then happen to your loan at that point in time? So the first thing that came out in this interim final rule is some guidance about if you happen to use less than 60% of the loan proceeds for payroll, how will that affect the forgiveness of the amount that you received? And we're going to use a simple example here with simple numbers. So let's assume that you received a $100,000 loan, keeping in mind that the average loan was slightly larger than $100,000. And let's assume that as a borrower, you were only able to use $55,000 of that $100,000 loan for payroll purposes. Will you simply take the total amount expended for payroll cost, divide that by 60%, and that gives you the total amount of the loan that is forgivable. In this case, it would be $91,666.67. So the roughly $8,400 remaining balance would then revert to become a regular loan that you would begin making payments on 10 months in the future and have up to 5 years in which to repay. So there were a lot of questions about how forgiveness would work if you didn't use the funds exactly as prescribed. And now we've got some good guidance and a formula by which you can apply this to your own situation and figure out what's best for you and your company. Going to give you another update that came out late yesterday that was a bit of a surprise for us, and I think will be a surprise for everybody that hears it. If in fact you received an EIDL grant, so if you applied for the Economic Injury Disaster Loan, people that applied were issued grants up front, and typically that grant ended up being a maximum of $10,000, but typically about $1,000 per employee in your business. If you received an EIDL grant, any proceeds from that grant will be deducted from the loan forgiveness amount on your PPP loan. When we got this information, we sent a series of emails over to some SBA officials and asked for some clarification on this. And I must tell you, we were on a webinar about, what, Terry, 3 hours ago? and we didn't have the answers. But about an hour ago, we did get some clarification from the SBA, and the fact of the matter is if you received an EIDL advance grant, that amount will be deducted from the loan forgiveness amount available to you under the PPP loan. So that's a new development that just hit the street yesterday afternoon. And you faithful participants in this webinar are now among the first to learn it. But I would invite you to stay tuned. It's going to be interesting to see how the 4.5 million borrowers that received a PPP loan actually respond to this, and whether or not they may put some additional emphasis on Congress. And who knows, this thing has changed every week for the last 13 weeks. I would not be surprised to see it change again in the next several weeks. So stay tuned. Our commitment to you is to bring you the latest information as it becomes available. So those are the two major things regarding the Paycheck Protection Program. I'm now going to move over to the Mainstreet lending program because there have been some significant developments through the Federal Reserve on that this week as well. The Mainstreet lending program is still not open and active, meaning that lenders are not offering this to businesses yet. The Federal Reserve had made a commitment that they would begin opening this loan program up in the month of June. We are in the middle of June now. I think it could well be towards the end of June when the PPP application process runs out. But there are some significant things to be aware of here. So first and foremost, if you'll remember when this is originally developed, the loan amount originally was established at $1 million. Then they changed it to $500,000. Now they've reduced it to $250,000 minimum loan amount. And then it is designed specifically for small business and medium-sized businesses. So the loan maximum can go up to approximately $300 million. So for a medium-sized business, it could be a substantial loan. The other thing is the loan term now has gone from 3 years to 5 years. So again, there's no forgiveness component of this loan. This is a straight commercial business loan. But they have extended the repayment terms. The other really interesting thing is they also extended the deferment. So from the time you're granted the loan, you're able to defer your first payment out 2 years and then have 5 years to repay from that point forward. So these are some pretty significant changes that are being made. The other thing is that the Federal Reserve is now going to purchase 95% of these loans back from the bank. So if you think a minute about how banks operate, when a bank has so much reserves that they're able to lend out, and when they lend those reserves out, they can't do any more lending. But in this situation, banks will be able to make the loan and then turn around and sell 95% of the value of that loan back to the Federal Reserve. So it's designed that way to encourage banks to continue to lend to the business community. So some pretty significant changes. It's still not out yet. I wouldn't be surprised to see additional changes coming, but I just wanted to keep you posted on where this program is. So those are some updates on the big aid programs. I'm going to jump right into cash flow and talk to you about, as a business owner, what can you be doing now to really be setting your business up to survive through this reopening process and then really begin to thrive as things return back to a sense of normal. So in the first session, you remember we talked about the most important thing you can begin doing is measure, measure, measure. Know where you are in your business. Know what your liquidity position is in your business at all times. And we gave you some tools to be able to go out and measure the current liquidity position of your business. Last week, we talked about how you raise cash, how you can use your own internal resources by first off, maximizing the aid that's available to you as a business owner, eliminating any of the auto debits that might be nibbling away at your cash balance, and really making sure that you're only allowing payments to come out of your accounts for those things that are absolutely vital to you right now, not the discretionary subscriptions that you may have been signed up for in the past. Also, how to tap your accounts receivables and begin to work your accounts receivables to generate some additional cash, and then how to work through your inventory to begin to generate some additional cash. This week, we're going to talk to you a little bit more about how to manage payments in your business. So let me move right into that. And I'm going to begin by telling you that as you look at your business expenses, there are really three types of expenses in your business. The first are those direct expenses. And these are expenses like the cost of the product that you purchase from a supplier that you turn around and resell or put into play. Also, the direct labor that's related to delivering your product. The direct expenses are those expenses that have a direct relationship to your income. So if you sell something, that means there's a cost that is directly related to it. Those are important expenses. There are also indirect expenses. Indirect expenses are related to sales revenue, but there's not a one-to-one relationship between the expense and sales revenue. The easiest thing to think about here is advertising and marketing. You can spend lots of money on advertising and marketing, and you know that at least a portion of that expenditure is going to generate sales revenue for you, but it's often hard to determine exactly what that relationship is. And then finally, the third type of expense is fixed expenses. They're not related to sales revenue at all. So, your rent or lease payment, your insurance costs, things of those nature, those costs are what they are. They're not really related to the income of your business. So as you look at a P&L for a second, we have taken an actual client P&L here and restructured it and showed you. It's where you can see there are some direct expenses. Direct expenses are typically those you would experience between your revenue lines and your gross profit line. And then we've broken out the rest of the bottom line expenses to those that are indirect and fixed. So you can see where those expenses lie on your income statement. So as a business owner, we really recommend that you take a strong look at adopting this format for your business. And it's a very easy way, particularly in tough times, to be able to make some very quick decisions about what you can and can't do to manage the cash flow of your business. So how do you use this effectively? Well, first thing you do is your first priority is, in terms of making payments, is you got to pay for your direct expenses. Those things are directly related to sales volume. So again, you're in a position where you may have less sales than normal, and you're figuring out what are the expenses that I should pay and which ones can I actually hold off paying as long as possible. This is really designed to give you how to set some priorities in your business. So always pay your direct expenses first. Without those suppliers and or providers of those direct expenses, you can't deliver the sales revenue that your clients demand of you. So it's important to pay those first. Then second priority is paying your indirect expenses. Again, those are somewhat related to your sales volume. So if you've got to prioritize what bills do I pay today, we're giving you some structure on how to do that. So your second one would be to look at what are the indirect expenses and put those in second place from a priority standpoint. And then finally, your fixed expenses, put those in last place. And if you haven't already talked to people like your landlord and asked for deferment and potentially engaged your force majeure clause in your contract language and otherwise to help you get some relief in these times, now is the appropriate time to do that. So again, hopefully this will give you some easy priority. I'm going to give you one other tool in terms of how do you manage the cash flow of your business related to the income and expenses. And this is what we call know your days. So what do we mean by that? First and foremost, if you're a business that sells things on credit, you want to take your average accounts receivables and divide that by your average daily credit sales. That's going to give you a ratio which is called your days accounts receivable. And if you think about that and do the simple math, you'll figure out that that's equivalent to a specific number of days of average sales revenue of your business. So how many days does it take you to actually collect from your clients the money that they owe you from the sale that you've recorded in your business? It's good to know how many days it's going to take to actually get that income into your bank. What's the other side of that? The other side of that is your payables. And if you take a look at your accounts payable, multiply it by a full year, and then divide it by your cost of goods sold, that's going to give you your days of accounts payable that's outstanding. Make sure that you are not paying your bills too fast. And very often what we see from business owners is they pay their bills as soon as they hit their mailbox, but they don't get collections from their customers for 30 or 60 days later. So this is a very good opportunity for you as a business owner to measure this and make sure that you're not paying your vendors way ahead of when you're receiving income from your customers. And it's a good, very good practice to balance these and keep them in balance. And this helps to manage the working capital and cash flow of your business. So hope these two tools in terms of how you prioritize your payments and then how you can balance your income with your expenses are useful for you as a business owner in managing the cash flow of your business. All right, now we're going to move on to the most exciting part of the day. We are honored and delighted to introduce you all to Kim Baker, who is the president, CEO, and founder of Vivid Performance Group. And Vivid Performance Group is a business performance improvement company that helps you future-proof your employees, teams, and organizations. We know Kim. We've worked with Kim. She is an outstanding individual and has a fabulous company who makes a real difference. And Kim is the type of business advisor you need on your side, particularly in these challenging times. Kim has founded, launched, and leads multiple organizations, quite an amazing entrepreneur. We highly recommend her, and she's going to talk to you all today about remote work and how that's affecting your organization and give you some incredible tools to be useful as you bring your company back online up to full steam. So Kim, we're honored to have you, and I'm going to hand the dais over to you.
Thank you very much. I appreciate that. Well, Steve, thank you for such a wonderful welcome. Gosh, don't I wish that Steve would just follow me around sharing that news with everybody. So I really appreciate being here today. I'm going to talk to you today about accelerating through the turn and using the 3 R's to actually return your employees and teams to peak results. So I think we'd all agree that COVID threw us a huge curve. And literally overnight, employees and employers alike were finding that all aspects of our work and personal lives were being upended. We were finding that all of a sudden we were remote workers, that we become homeschoolers. Many were involved in elder care. I think probably all of us at some point have felt a little bit financially insecure or worried about that. Absolutely, we lost control or have a sense of loss of control. And through it all, we've definitely seen in some areas lowered productivity. So COVID actually, it really does check the box for what we call a black swan event. So those black swan events are unpredictable, unforeseen situations, and they typically have very extreme consequences. And while we knew a pandemic was coming at some point, statistically, we certainly didn't predict or foresee the one that showed up in 2020. So what's happened because of this inability to predict and prepare, we found that we employers actually haven't been able to really care for the mental health needs of our employees as they're really struggling to balance work and life. We also found that because we didn't know this was coming and we couldn't plan, we really weren't able to strategically assess the aptitude of our employees to actually be effective at remote work. And hint, hint, not everybody's really wired for it. And then finally, with this free flow environment and things happening so quickly, we really didn't have the opportunity to be able to optimize how we structured and we coordinated and we managed the work roles, and the way that the team dynamics and performance might change. So we're going to go to a poll right now because we're really curious to see how our audience here has found that they've been impacted by COVID. So we're going to put some poll questions up there, and if you'll answer those, we'll see how our audience has fared.
Poll is now up. We've got 3 simple questions for you.
Yeah.
And voting has commenced.
All right.
It amazes me why the United States can't do this. Why do we have to make people wait in lines in the hot sun? All right, so Kim, we're a minute in and we've got significant, about half of our participants have voted.
Okay.
And still some action going on.
All right, good, good. Yeah, we'd love everybody to chime in.
%70 voted at this point.
Okay, should we give it a little bit longer? Think we can get to 90, even
Come
100?
on, folks, we can get to 90, 100%.
Come on, guys, we can do it. We can do this. We're going to compare this to some national survey data. So I'm just really curious to see what our IBA audience has found.
Not quite to 90% yet. Kim, can you see the poll on your side?
I can see it, but not the results. So I can see the questions.
Well, excellent. We're 2.5 minutes in.
Okay.
And just shy of 90%.
Okay. Well, we can go ahead and close it if you think we should.
All right. Survey says, you interested in the results?
Yeah, let's see the results.
Okay, so let's see. We end polling. All right, here we go. And we will share the results.
All right, so look at this. Of our poll takers, 62% express that they've had a major impact to their life of COVID. What percentage of your remote workers do you believe had the personality traits to work effectively from home? 38% of you say that between 34 and 66%, and 54% of you say between 67 and 100% of your workers. So I'm gonna write these down because we're gonna take a look at some national data, some actual scientific data, and have a discussion. And how would you describe your post-COVID productivity? So, gosh darn, we're pretty darn equal. No impact, 38%, and then the remainder is split between folks who are more productive or less productive. So, really, really interesting data. So we'll take a look at what the national surveys tell us. So thanks everybody for taking part in that. All right, so in terms of work-life balance, and that's a bit of our surrogate for impact. So we're going to talk about work-life balance. And here's what's really interesting. Prior to COVID, when employees were surveyed in terms of their ability to balance their work and life, you know, looking at the various surveys in 2019, so this is very, very recent data, between 45 and 54% of all employees said they were struggling to balance their work and life. Now, within this specific study that called out the 54%, of those folks, 57% said that they felt that their employer wasn't doing enough to help them balance their work and life, and 60% directly blamed their boss for their struggles with work-life balance. Now here recently, we saw a study come out, and employees are reporting 60% are struggling to balance work and life. So when we start peeling the onion back, what we're finding is that the folks who are really struggling the most are new to remote parents who are also homeschooling, okay? And in fact, for some folks, this is a very, very dire situation. In fact, recently, Fortune released an article, and 11% of all men and 14% of all women are considering leaving their current job to take care of home responsibilities through the COVID pandemic. So we also know that work-life balance, if it continues or an imbalance, leads to significant stress. Significant stress can lead to burnout. Now, why am I telling you this? We all talk about millennials. Most of you probably have, maybe a majority of your employees are millennials. Maybe you're a millennial yourself. Here's what we know about millennials and burnout versus all other generations. Millennials are 9% more likely to report that they feel burned out. They're also 19% more likely to leave a job that they feel burned out in. Now, why am I giving you all these statistics? I'm gonna tie it up in a nice little bow and give you the so what of it. If you in your organization have critical roles that are filled by a millennial who is new to remote, who is also managing homeschooling, and who also really appears to be under a lot of stress and anxiety, take note, because that individual is a retention risk. And again, if they are a key individual, if they are in a key role, you really, really want to be attuned to this and support them. And we're gonna talk about some practical, simple tools to help you with that. Now, this concept of remote worker effectiveness has, it's beginning to bubble up in the past 5 to 10 years. And the reason is because through digital transformation, we actually believe that somewhere between 50 and 70% of all jobs could be done remotely. And we've certainly seen this shift globally. Prior to COVID, little less than 4% of workers were working remote 100% of the time. Another 2 to 3% were working sporadically. Now, what we find is that through the literature is that through the measurement of certain personality traits, we can actually predict who might be more attuned or adept at working remotely. We also know that through strategic awareness, we can help folks who may be a little less attuned actually upskill and be better at that. Now, when we talk about productivity, around 25% of those surveyed say that they're more productive. So our group here was around 31%, I believe. Upwards of 42% feel they're as productive, and around a third feel that they are less productive. Okay. So these are key takeaways. In some ways, you know, some rural stop signs. If 60% of your employees are struggling to balance work and life, there's no way that that is not impacting your business. There's just no way it's not impacting your team, because for many people, especially the financial aspect, you know, it's kind of a 2 + 2 = 10 when we add financial aspects to it. Remote worker effectiveness, 40 to 65%. Well, what that tells us is 35 to 60% of our our workers are not actually optimally skilled for remote work. So we're probably going to have some work to do there. So I'm curious if you would tell us in chat, and I need to correct this, tell us in Q&A, how has work from home negatively impacted your business, and what have you done to try to stem this impact? And again, if you would do that in the Q&A. So one of the things we're hearing is that impact has been reduced income with slowered computer functions or connectivity issues. Another is telling us that the resolution was he or she has 2 office locations that have opened and all the staff has returned. Okay. So it sounds like maybe for you that was kind of hopefully a short term. Who else could share in Q&A what they've encountered? All right. So it looks like we've got some shy folks. Oh, I see something else here. So because of the pandemic and being high risk, I've not been able to work through my business. What I've been able to do is slow down and focus on really getting my business in order on all aspects, working on new logos, new websites, etc. Okay, yeah. Yeah, it's interesting. Through this, we've seen some folks who had to slow down, attribute some of their funds to training and, you know, making those kinds of changes, definitely kind of catching up with things that maybe they didn't have the time to do before. So I'm going to talk to you now and ask you a couple questions. So what would it mean to you if you could actually improve the work quality and productivity of your remote workers by way of upskilling them in 5 key work from home areas? What would it mean to your business and you if you could improve engagement and retention and employee mental health by helping your employees be able to actually balance work and life? And what could it mean to your team's performance if you could actually help them deliver better in 5 critical to success team roles and outcomes? So I'm going to talk to you now about our 3-part plan to survive and thrive and accelerate your business. And we're going to take a look at the 3 stages of remote, re-entry, and resume. We focus in on delivering these through very practical tools delivered through assessment, training, and coaching. Now, the first step is remote. And in this, we really work to stabilize and optimize the remote worker effectiveness. You know, the research tells us that there are actually 5 key skills that are involved in being an effective remote worker. Number 1 is that, you know, we really need people who are able to self-manage. You know, they need to manage pace and work with structure and actually, in this way, be able to really define and manage what the work-life boundaries will be for them. We also need people who are really great communicators. You know, this needs to be done proactively and purposely and in a way that actually builds trust. Certainly, you know, we need people who are dependable and who will complete the task and keep others in the loop. We also need people who are really flexible and adaptable. You know, whether it's getting used to new technology, different processes, maybe having to take on different tasks or some different type of a role change. You know, we need people who are really able to do that. And then we need people who can engage in relationship building. You know, when we're in the office, it's so much easier to, you know, do that through, you know, the water cooler talk and the lunchroom and maybe happy hours out together. But it's just different in the virtual world, especially when we know that people are managing so much behind the scenes. Now, when it comes to personality, we know that there are 5 factors that really do have impact to a degree in workers being able to optimize these 5 skills. So what we look for in folks who would be more effective at remote work are people who are what we call high adjustment. So I think about a combination of the Energizer Bunny and a Timex. So, you know, takes a licking and keeps on ticking and does it without extreme anxiety or emotional angst. So we need people who really can deal with stress, who can, you know, take some defeats and just keep getting back up and not be demoralized by it. We also need people who have a pretty high degree of prudence. So when you think of prudence, think of measure twice, cut once. Ambition's probably pretty darn obvious to most of us. Sociability, you know, we need people who are interested in socializing with others. Again, so much of that is about the relationship building and the communication. And we need people who are high on interpersonal sensitivity. That's, again, that key part of actual, you know, communication and dependability. You know, if I'm high on interpersonal sensitivity, I'm aware that people depend upon me and I care about that. I'm also most likely much more empathetic to my coworkers and maybe some of the challenges that they're dealing with. Now, there are actually some things that we prefer not to see in a way of personality. So, and we measure what we call derailing behaviors. And so if somebody is at a high risk for being excitable, skeptical, imaginative, mischievous, and colorful, that can be kind of a red flare to us. Now, again, we can work with folks who maybe score low where we want them high and where they score high where we want them low. And we do that, you know, through the training and coaching and creating this strategic awareness. Now, we can do this for an individual employee, but here's what's really crucial. If you have a new team coming together post-COVID, whether they're working from home or in the office or a combo, bringing people back and getting used to this new reality and coming through these mental health aspects is really important. The other part is that helping them really align and be clear as a team leader where your team members are when it comes to being able to work remotely. Even if you're back to the office now, because of the concern of resurgence, this would be a good insurance policy. Even if you're all the way back to work, it'd be a good insurance policy in the event that we have to go back to working from home. At least you're going to be better prepared to support these employees to do that. Now, the reentry step is, in this we look at really supporting employees so that they can harmonize their work and lifestyle and support them in mental health and through their emotional intelligence in ways that they learn how to reduce their stress, make better decisions, and then just manage some of the negative emotions that can happen. So it's really interesting when we look at how we manage our work and life. There are basically three ways we go about it. You know, some of us are separators where we want that great divide between work and life. Some of us are just really very facile and comfortable blending and blurring those lines. You know, you might be someone who in an 8-hour period of time can just move back and forth between work and life, or you do that in a 24-hour period, or you do that in 7 days. Or you might be a cycler, you know, where you go through periods where you have to fully separate work and then periods where you can blend the two. So the most obvious vocation I think of is CPA in public accounting, right? We all know that between January and April, they are heads down. It is work, 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 and life goes by the wayside. Come April 16th, all of a sudden, there's a lot more life happening, right? So it's very unique the way we assess this. It's through a workshop and self-discovery and self-survey where they really take a look at how they manage boundary control, how they work with interruptions, their dependency on device. Really, a lot of this is how I identify, you know, do I identify first in my life or first in my work? You know, millennials are the first generation that a high percentage of them, when you ask them to describe themselves and what matters to them, they will identify life versus work first. So that's really been a change. Now, when it comes to managing emotions, we work with emotional intelligence. And this is not an uncommon term. Most of us have been hearing about this for a while. And emotional intelligence is simply our ability to use our emotions in a positive way to make decisions, to manage stress, to build personal relationships, and actually to work through conflict. And the ways that we look at that are to assess an individual's self-awareness, how they express themselves, you know, what their interpersonal awareness is, how they make decisions, and how they manage stress. Now, emotional intelligence it's a key differentiator in the best of times. We're not necessarily in the best of times. And what happens is in a situation like this, when we're highly stressed, it's really hard for us to use our emotions in the most productive way. And I have to really emphasize how important this is for you as leaders and business owners and people managers. And here's why. Right now, you in your business are making, I'd venture to say, some of the most critical decisions you've ever made. And you're doing this, I'd venture to say, in an environment with the greatest degree of uncertainty and ambiguity that you've probably ever faced. And for us, when we have these decisions to make, we can fall back in using the most primitive part of our brain, the amygdala. That amygdala is the part of the brain that goes to fight, flight, freeze, or appease. But as leaders, we need you working from your prefrontal cortex. That's the executive brain, right? It sits at the front. It's the more newly developed brain. Now, the purpose of that part of our brain is for higher ordered skills and activities. So it's in our prefrontal cortex that we do all the analysis, that we do strategic planning, that we apply judgment. And it's also that part of our brain that's responsible for empathy. So it's really, really critical that while you're thinking about supporting your employees, as a leader, a business owner, or manager, think about yourself. Think about how you are taking care of you and how you are being impacted by stress. We make some of the worst decisions in the worst ways when we are encountering too much stress. And finally, the third step is resume. And in the resume part, we're really focused now on the team. So if you think back, we started focusing on employees, making sure that they're really wired for remote work and supporting those individuals or teams who really maybe need some awareness and upskilling. Then we took a look at reentry and how are we helping employees really balance their work and life? How are we helping them use their emotions in effective ways to work through conflicts, to work through stress, and to make the best decisions on the job and also help them make the best decisions at home. So now it's time to really also focus in on the team. Now, we know that just as personality has a major role in determining how effective we are at remote work, it also is a strong, in fact, one of the strongest predictors on how well teams perform. And specifically in 5 key areas of effectiveness. You know, how do teams perform in terms of results, process, innovation, pragmatism, and actually also relationship building. We know that stress can actually be a major derailer. And just as I talked about derailing behaviors in terms of a remote worker's effectiveness, we actually also assess the incidence of derailing behaviors in a team. And we actually can then work with individuals or the team to try to work to mitigate and lessen those to create better outcomes for the team. So when we look at using personality for a team, we're really wanting to design a team in a way for peak performance. So the way we would use this is, for instance, if you're looking at a task force, if you need to bring together a small group of people and you really want to make sure you get the right mix, that you have people who can deliver results, that are going to follow process because that is important, who can deliver innovation if that's what you're really needing, who can build relationships with external stakeholders, internal stakeholders, the board, whatever you have, and also people who have a degree of pragmatism, right? Innovation is a wonderful thing, but we also need some pragmatism as well. And too much pragmatism will stifle innovation and vision and growth. This is also really helpful if you've got, you know, a team that's pretty darn high performing, but you really want to support them in raising the bar. And it's really, really helpful in turning around lower performing teams. Personality in of itself can be, for an employee, a hindrance or a major supporter of their outcomes, and it certainly impacts the team. We also then look at how do we help teams master the 6 conditions of effectiveness. So where we looked at a team's personality and how that enables them to fulfill critical roles around results, process, innovation, relationship building, and pragmatism. Now we're looking at teams and how we can improve their effectiveness regarding their overall skills, their purpose, their structure, how well they cohese, and also by providing support and coaching. This is really appropriate for newly formed teams, for stalled or struggling teams. So if you're finding in your organization that you've maybe had to furlough or do permanent layoffs, if the work is shifting to different employees, if the work is shifting between different teams, this is a great way to support them if this is in fact what they need to be higher performing. And then finally, when it comes to really giving teams feedback from their environment to really help them understand how they're being perceived and received and what they can do to strengthen the good things they have or maybe work on the development areas, we work with teams through improving their leadership team performance index. You know, teams need that stakeholder feedback, and it helps us understand the difference between our intention and our impact. You know, it's often said, and I think it's so true, we judge ourselves by our intent and we judge others by their impact. So as an individual or a team member, I may be thinking that I'm impacting in a certain way because I'm judging based upon, of course, my good intentions, but maybe my good intentions aren't translating to that, to the external world, whether it's customers, vendors, other groups within my organization, or certainly even my own team. And we know that well-constructed feedback is really important because it helps us all address our shortcomings and key in on some blind spots. And when we work with this tool in teams, we always link this to specific goals, their strategies, and challenge. So this is a never, you know, kind of a navel-gazing exercise at all. We are very, very behaviorally focused, and we are very, very tactical and really quite quantitative in terms of what we want to see work for teams. So where this tends to be used most is for teams who maybe are disconnected, not delivering on what they need to, or also just for teams who maybe have a new initiative and we want to deliver the strategic awareness to them so their opportunity for success is even greater. So I'm going to go ahead and stop now. And is it okay, Steve, if we take questions, if we have any from the audience?
Absolutely.
Okay.
Yes, and Kim, we do. We have quite a few questions and comments here.
Awesome.
I can tell you one thing, even I, as I listen to you speak, I think in the context of what we have been going through and presenting even relative to these webinars around COVID, we've taken a very accounting and bottom line approach to decisions when in fact there is that dimension, and you bring us back to considering that human dimension on the decisions. But let me throw some questions at you. Steve, some of these questions are for you also, but let's start with some of Kim's questions. And first, Joshua asks the question, he says, I'm a millennial that survived the last recession. Please parallel advice from that recession to this pandemic emergency.
Sure. So in terms of parallels, definitely uncertainty, definitely a slowdown in hiring. What is, and certainly what we see is the stress, right? It was very stressful for people losing jobs. In terms of this, and that's kind of where you see some parallels, but so much is just different when we look at the loss of jobs overnight and the unpredictability of how fast we will come back. I'm told Worldwide Technologies isn't coming back to their offices until January. Other companies are starting to come back. We don't know if the consumer, what they're willing to spend. So is this going to cause a slowdown in buying and impact some companies? So it's in some ways, I think there's much less certainty.
Yeah, I think you even see it in the stores. So as I've begun to get out a little bit, I mean, now we've got these screens that are between us, and servers and helpers in every situation. So it's almost like there's this artificial barrier that's between people.
Mm-hmm.
And I often also think about the whole term social distancing. I think is somewhat counterproductive. I tend to think of it as physical distancing. We need to maintain some physical space between us, but we shouldn't be social because we're social creatures. And I think that is having some level of psychological impact. What's your thoughts on that, Kim?
Definitely. So a major thing is isolation, people working at home, because so many people are single, living alone. So there's a lot of discussion about the mental health aspect is a lot of it has to do with isolation. And then of course, just this overall uncertainty. It's really interesting. Some people seem to be really comfortable with the plexiglass, and it's just kind of, all right, well, this is as we say, the new normal. And if this is, for me, I went to get my nails done the first day it was available, and, plexiglass between me and the manicurist, and I'm fine with that. I'm just glad I can get back there, because I'm starting to do something that's normal. I'm starting to feel like the human that I know me to be and that I want to be, right? We like our routine. We like what we like.
Okay, good. Kim, let's move on to another question. Jana comments more for discussion. Because of the pandemic and being high risk, I have not been able to work through my business. What I have been able to do is to slow down and focus on really getting my business in order on all other aspects like the logos, website, etc. That work that had been put off or back burnered is now coming to front burner. Interesting concept. Kim, what are your thoughts on that?
Yeah, definitely. We've seen that with businesses that kind of slow down, taking that time to, kind of what are the things that I've had on the to-do list that I just quote unquote never had time for. And so, yeah, we definitely see that.
Okay, good. Jenna also makes a comment, and again, Kim, you might speak to this. She's curious from the polls that we did, whether the people answering had large organizations, if they were companies of one or two employees, that she thought that might in some way impact their responses on the poll questions.
Definitely. Yeah. And I don't know if you all have line of sight to that, and the number of employees for the folks here on the poll or not, or here on the webinar, I should say.
I don't think we asked that question. We just, we simply see we would have to poll that question. Mm-hmm. I've got a couple here, Steve, that you might address, and this is a revisit on the interest rates on the Mainstreet lending. Christy asks, what is the structure of the interest rates looking like on those Mainstreet lending loans? Do we have any info on that?
We do. They're going to be very low. I would think that with the current interest rate environment, they're going to be 3% or lower. So I would expect them to be very low interest rates. A lot of it depends upon where interest rates happen to be when they turn it on. But the Federal Reserve did come out and say that they don't foresee interest rates will go below zero. But I would expect that with the final mechanisms that they release, we'll probably see 3% or maybe even a little below 3% as an interest rate on those loans.
Okay, and then Christy asks again as follow-up to that answer, Steve, what is the minimum loan amount? Is it $250,000?
That's what it is now, as of today. And again, I would encourage Christy to stay tuned because it's changed twice already. It's not released yet. I wouldn't be surprised to see it change again before it gets released. And there are a lot of the whole reason between the Paycheck Protection Program, if you think about it, originally came out under the CARES Act. Then they went through a reauthorization in round 2 where they tweaked the law a little bit. And then there was the PPP amendment in round 3 where they tweaked the law further. That was all in response to pressure that Congress had received from various groups like the National Restaurant Association and the Independent Fellowship of Business Owners, et cetera. So, you know, I would expect that with the changes we've seen in the Mainstreet lending program from the Fed so far, it's very clear they're getting a lot of feedback from lenders and other highly interested business groups. And I think that, you know, one thing that's really encouraging about this current administration is they've been responsive to that. And they have been willing to make adjustments to affect the feedback that they're getting.
Okay, I have two questions, and I think we'll pull it to an end after these two. First is, Steve, I'll direct to you, and this is from Steve. He asks the question, he's a driver with Uber Lyft, so that probably means he's a 1099 worker, independent worker. How much should his loan be when he applies? Is this based on his 2019 income? I think we've answered that before, but let's quickly go over it again for Steve. He may not have been on one of our earlier calls.
Yeah, that's correct, Steve. And we would direct you to our YouTube channel. Go to YouTube, Innovative Business Advisors. There's a whole 22-minute video directed towards people like yourself, independent contractors, sole proprietors, and gig workers. And basically, if you provided on your tax return, if you use the Schedule C to report your income as an Uber driver, the net income, the bottom line, that line 31 in your Schedule C would be what they use to calculate your loan amounts. So that would be the amount that they use, which is in effect the net income that you derive from being a driver for Lyft and Uber.
Okay, thanks, Steve, on that. This will be our last question. Anything else that's typed in, we will answer via a response to the questions via transcript. Kim, I'm addressing this one to you, and Jeff asks the question. He says, and it's a comment of, again, point of discussion. He can't travel, and that's his biggest impact from this whole COVID situation. His position is one that really requires a lot of face-to-face work with his clients. It's very important in his business, and that's been a big downside. What does your research show around impact on people, specifically whose product or service demands face-to-face?
Yeah, significant. You know, I do a lot of work with medical device companies, and those sales reps, you know, specifically in the operating room. And when elective surgery stopped, you know, for the organization, the money stopped flowing in. The hospitals also eliminated the reps from visiting because, well, you don't really need to be here because you're not covering a case. Now, what's really interesting will be how these organizations open back up. I can speak to reps going back into the operating room now, temperature checks, right? I suspect once we have a vaccine, those particular reps will have to have the COVID vaccine. It's required to have a flu shot anyway to get into the hospital if you're a sales rep in the operating room or pharmacy. What I'm hearing and finding is that reps getting out and traveling, there's a yin and a yang, if you will. So while their company may open them up to travel, if their customers aren't willing to see them, this is, you know, outside of healthcare, then they're still limited. I'll tell you the other thing I've really ran into, the challenge of business development. I mean, for so many folks, their pipeline is just stalled. For some folks I know, you know, as they've tried to, you know, kind of do the smile and dial, try to do some cold calling, follow up on leads, they don't have cell numbers, they have office numbers. And you leave a voicemail and you really don't know if it's going into a vacuum, if that person's voicemail is being transferred to their home. So it's still this unknown. And of course it varies across the country. You know, we still have some states that are pretty darn closed.
Okay. Well, Kim, thanks again. That was a great response for us, a great presentation, and a great discussion on the back end of it. And I encourage any of you who have thoughts, afterthoughts even, to shoot us a note. We will actually, as I said, post on our Innovative YouTube channel the recording of this webinar. We will include a link to our Google Docs page, which will have the PDF of the PowerPoint presentation, along with a PDF of the Q&A a transcript of the Q&A. So with that said, we're going to have a chance now for one last word. Okay, so we'll go in order. Steve, you want to give your last word?
Well, I'd like to ask Kim before we close out. She's making a very generous gift of providing a free remote worker checkup. So Kim, would you speak to that for a minute and tell our audience what that's all about and what they would receive?
Absolutely. So the remote worker checkup is a stylized version of the actual scientific assessment. So when we assess personality, we do it through a scientific assessment. But by creating the remote worker checkup, I've taken elements of it so you can just get a sense of where you may fall in these 5 critical skills. Super easy to follow the link, download it, and you'll also be receiving the flyer, or the sales sheet as we call it, on the accelerating the return, the 3 R's. If you want to refer to that, by all means, if you're interested in connecting with me on LinkedIn, please do that. If you have some questions, don't hesitate to send an email. Happy to pick up the phone and have a discussion if you're curious about anything we talked about today or anything kind of related that you think might be in my wheelhouse. I'm happy to talk.
Again, we highly recommend Kim and her group. Kim, we're honored that you would give us the time this afternoon to share with our audience, and we thank you very much for that. We're in your debt. So we appreciate it. Hope you get out and enjoy this wonderful weather we're having. And just want to issue thanks again.
Thank you.
Okay, Terry, your shot at any last words?
Yeah, it is very interesting, Kim. You bring a human perspective to it. Steve and I are always all about the numbers and stuff like that, but there very definitely is a human side. So again, thanks for being on.
Okay, Kim, you get the very last word.
Yeah.
Any last comment you'd like to make?
So I would draw the parallel between what your webinar has been focused in on. So finances and cash flow and really kind of that green capital, so to speak. This is all about the human capital, you know, and so many times we fail to really think about what human capital is. And it's the total sum of the knowledge and skills and abilities of your workforce. And as a business owner, you're caring for your cash. And if you have equipment, you're caring for that. But what are we really doing for our humans who have gone through so much? And many of them are pretty darn fragile. And if it piques your interest, just Google mental health and COVID. And it's pretty frightening for some folks what they're going through. So I'm excited to offer these tools, practical tools. I will tell you, these are highly discounted rates that I'm offering because I want to help as many people as possible. And I know at this time with COVID, you know, cash is king. So it's, you know, business owners have to really balance, you know, where I spend my money. But if I don't support my employees, what does that mean for my profitability and productivity as well?
Thanks so much, Kim. Yeah, with that said, we're going to pull the webinar to a close now. Thanks, everyone, and to all of our participants, have a wonderful weekend. Bye-bye.
Thank you.
Bye.
Thank you. Take care, Mark.